The following is a presentation of TFNN. Live at TFNN, the Small Cap Roundup, with your host, Kate Stalter. Now, Kate Stalter.
Well, happy Tuesday, and it's a happy Tuesday, regardless of what we're seeing out there. We got ourselves a market correction. No question about that, what's going on there. I just a moment ago, I looked up at the Tiger Den, and I really don't know the context for this at all. I just happened to look up and see my buddy there in the Tiger Den, G7. He typed out something that said, I believe, dung is coming back. I'm going to have to agree with him on that one. I don't know. Probably even the fertilizer makers are not having a good day. I have not particularly checked those, so I don't know the context of what he meant, but definitely dung. Yes. So I put up a chart there. I heard at the very end of Tom and Steve at the end of their show discussing the IWM, taking a look at that one. I have a daily chart up there on Tiger TV of the IWM, the Russell 2000 ETF. You're seeing that well below that 50-day line. You know, it's. I think we all know this, that when there are rallies, you know that there's always the proverbial other shoe somewhere getting ready to drop. From Europe, of course, who knows what's going to be coming up in the U.S., and I think just about every show, yeah, I see, Terry. I missed the D-U-N-G is the slang for U-N-G. Yeah, I missed the context of that. I just looked up and saw that one little comment, and it did make me laugh. Didn't see the prior conversation you were having on there. You know, it's interesting. It's just about in every show I have the little opportunity to talk about forecasters. And earlier this year, I was having a chance to talk to a lot of forecasters, making quite a few grandiose predictions about what is coming up in the summer here. And, just a few days ago, we heard a lot of people with the sell in May, go away, debating that. I mean, who knows? Who knows what's going to happen in the rest of May? So these things are really not worth debating and getting different people on to argue their points of view. It's really just about what the charts are showing us. And, natural gas aside, dung is back in the charts. So that's what we have right here in many of these right now. Let's see here. One of the things I want to do, obviously, aside from Europe, the big discussion in the market these days is the Facebook IPO coming up. And that's, I believe it's scheduled for May 18th. And that is something that, regardless of the market conditions and regardless of whether or not you do have to start getting out of some stocks and take some small losses, watching new recent IPOs is always a very valuable exercise. I mean, that was a big thing I learned back in the previous decade, as well as was reminded of it again back in 2009. So that is one of the scans that I frequently like to take a look at. You really can see many of the previous price performers and many others that are, if they're not setting up in price leadership, they are setting up in potentially lucrative chart patterns that when a new rally really does take hold, they could be among some of the winners. Now, before I go into that, just to kind of recap what happened with the rally that was confirmed on April 25th, there is a pretty significant percentage of new rallies that fails, and this is where the trader needs to be pretty pretty adept and pretty nimble and ready to make a move out if possible, and I am certainly taking that to heart these days. I am watching my holdings very, very carefully. In some cases, if they even do not hit the trigger point, I will get out. So that is just something to know, that I'm on pretty much high alert mode right now with the few stocks in the discretionary portfolio. And there are not very many of them right now. So nonetheless, about maybe about 25, 30, 35% of new rallies do fail, so you have to be prepared to get out if necessary. Obviously, the rally that was confirmed back in the later part of April did fail. There's just so much news driving the market, and it's not necessarily the case, the forecasters aside, that the news will always tank a technical uptrend. You do have occasions where the news just continues to be bad, 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 and the markets do rally because someone sees some hope somewhere. There is some glimmer. But right now we have obviously gone back into a downtrend on the European concerns. I mean, that's what it's being attributed to. That seems to make sense. And of course, as we've said frequently, we did have that terrific rally in equities in Q1. Not surprising to see a pullback at this juncture. Okay, so back to the discussion here I was starting to have about the recent IPOs. You know, a lot of times these are not even the names you necessarily hear that much about. So let's see here. I'm going to put in the ticker for Ellie Mae, E-L-L-I. Okay. So this is a company that makes software for mortgage originators. Now, this stock went public, let's see, back in April at $6. And it's really not uncommon at all to see a new IPO pull back after an initial pop. I'm going to put this up here on a weekly chart for you rather than a daily, so you could take a look and see what's going on here. Okay, so it went public a year ago, so you're not really seeing quite the full year on here. However, you can see that initial decline. And of course, in the summer of 2011, the general market did have that big pullback. Now you see what's happened with Ellie Mae in 2012. And so far this year, I ran the numbers, I believe it was on Sunday, and it was up about 170% on the year. So then what you see here, you see a big price move up last week, went up 21% last week after the company's first quarter report. Now, right now, this stock is out of buy range, pulling back a little bit today, which is nice. That is what I want to see. Let me just see where this is. This is well above a couple of the moving averages I like to use, in addition to the 50-day, because that's a good place to see institutional support. On a trading basis, I also use the 10-day and the 20-day line, holding well above those. If the stock does go on to correct a little bit along with the market, although obviously it's been tough to amass any kind of trend, because you do see news that breaks that sends the market higher again. So it's been tough for some of these stocks to really form any lengthy consolidation. But nonetheless, right now it's consolidating well above that 10-day moving average. The prior high on there was actually reached yesterday, intraday, and then it reversed lower. So this, to me, I would consider a very strong watch list candidate. This is, let's see, it's expected this year to report earnings growth 58% to 38 cents a share. Next year, 63 cents a share expected, so that would be up more than 60% for 2013. And, as I often mention, I don't use the fundamentals. I don't use earnings estimates as a determinant in whether or not to make a buy or sell decision, but as a watch list element, it is important because it does show you whether the fundamentals are likely to attract institutional investment. And, we actually, on this show, we do have quite a few fund managers. As we've launched the newsletter, by the way, tfnn.com, low price leaders, check it out. We're at a tough market right now. So as I mentioned, I'm reevaluating some of the positions, keeping a very, very close eye on the ones we have in there. However, we do have regularly on the show, I'm going to be getting back to this very soon, a number of the small cap fund managers who come on here, talk about how they make their buy and sell decisions. Make no mistake, the fundamentals are huge for these guys. Doesn't mean they have to be for us. Not at all. Just means that this is the methodology that they were taught in school. I've sat in those corporate finance classes. I know what you learn in there. It's a lot of valuation, and that's what these guys use to make their decisions. They many of them don't rely too much on the charts, though I am, as I'm talking to them lately, it does seem to be the case that most of them do have more of an awareness of the chart patterns than perhaps fund managers would have a few years ago. But nonetheless, those do not determine their decisions. And also, they do have their price target. So if something gets to the point where they believe it's overvalued, and that's always, in their cases, relative to a PE ratio, they will get out of a stock and sell it. And so that will also sometimes cause a pullback on valuation, often opens up a new opportunity to buy for some other value investors and retail investors to swoop in there and get some shares at a bargain price before they do go up again. So sometimes their selling can really open up an opportunity. So anyway, so to come back to Ellie Mae, all of that is just to say I am waiting for a pullback on this one. The fundamental picture is excellent on this, and that bodes pretty well in terms of its likelihood to be attracting institutional attention. Very thin trade, okay? This one only moves about 115,000 shares a day. Market cap is pretty low. Hang on one second. Let me just get this. Yeah, about 330 million on the market cap. I wanted to get the most current number on that one. So this is one that could be a bit risky just because of the small size of this stock. The thinner stocks can tend to be more volatile, but you gotta like what you're seeing in here in the past few months, and at this point, some kind of pullback at this juncture could be something to watch for. And, of course, those moving averages are going to move higher, the 10-day and 20-day that I've been watching. I want to come back and talk about a few more recent IPOs. There's one that got a lot of attention just because the Facebook IPO is coming up, and that's not having such a good day at all today. Hasn't done so well since it launched. I'm Kate Stalter. This is the Small Cap Roundup, 877-927-6648. Be back after this break.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shree's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
All right, I'm Kate Stalter, back with the Small Cap Roundup. Let's see here. I want to talk about another recent IPO here. Let me put the ticker up in front of you. Sync, not NSYNC. Not talking about old school boy bands here, but Sync, S-Y-N-C. We had a caller call up about this one the other day, and this is Synacor. Now, this company, this is another one, and you see, and I've got a daily chart up there in front of you on Tiger TV. You could see a big pullback today following an all-time high that it rallied to in yesterday's session. Now, this one went public at $5 a share back in February and trading now, let's see, at about around 11, between 11 and 12, about 11.24, I think, right now. Yeah. Okay. So this one is also out of buy range. Pullback in order. Not surprising to see all of these stocks pulling back. No relationship to political problems in Greece. It's just a lot of traders, investors just taking some money off the table right now. Everything goes into the worry zone at this juncture. So this company, as we discussed the other day, if you heard, it makes a technology platform for telecoms, cable operators, other digital content providers to manage their delivery and services across various devices. And as I just said, this went public at 5 in February, so a nice run-up. Had sort of that typical little, you can see there, if you're looking at Tiger TV, let me put this on a weekly chart. We can get Let's see. Okay, a little better view there. And you can see this little pullback it had in the earlier part of the year, then kind of began rallying, had a nice big rally in the past couple of weeks. Now, what happened, we did have our caller on the other day. We talked about this. What happened here on May 1st, the company said it was acquiring a privately held company called Carbon. And that's a cloud play. It's a company, Carbon, C-A-R-B-Y-N is the acquisition the acquisition company there. That's a cloud-based company that delivers applications to various mobile devices, fits in very nicely with what Synacor is doing in its business. Doesn't Synacor sound like it should be a biotech? To me, it does. To me, it sounds more like a biotech than a digital content software platform. But nonetheless, okay. Yeah, so Carbon was the acquisition, and this bounced on the acquisition. Carbon was privately held. A lot of times when one public company acquires another public company, you will often, as I'm sure many of you are well aware, you will see the acquirer trade down that day. But this is a case of a public company buying a privately held company, so you don't necessarily see that phenomenon as often. So Monday did rally to a new high, reversing lower today. I think just a lot of discouragement in the sentiment out there in the market. And we're a few minutes away here from the European close. That'll be interesting to see how U.S. equities, if there is any bounce following the European close. But last I looked, there was quite a bit of selling in Europe ahead of their close. So nonetheless, even little companies like Synacor, something here with a small market cap, a low price. Now, well, let's see. Yeah, this is low price. You would consider this in the low price zone at about 11.17 right now. So absolutely, this would be on potentially a low price leader. Absolutely. Also a small cap, 379 million. Now, lately, the trading volume has picked up, of course, as you see some of these big moves. More than 400,000 shares a day have been traded on average. So there's some things to like about this, but really a pullback is in order. You know, at this juncture in the market, we're just going to have to be patient. That's really all there is to it. And this is just a repeat of many of these market pullbacks in the past where I've just maintained my watch lists, and then you're ready to go when a new rally does take hold. Obviously, as I mentioned before the break, the one that began on April 25th, just not enough institutional support to keep it going. The bear case was just too overwhelming. So at Synacor, the fundamentals are interesting on this one. The company became profitable in 2011. Annual earnings of 15 cents. Expected to be 16 cents in 2012. Now, analysts are expecting triple-digit earnings gains on this one in 2013. So this is another one that I'm keeping on my watch list. I got some more recent IPOs we can talk about when I come back from the next break. I'm Kate Stalter. This is the Small Cap Roundup. Stick around.
What you think about, you bring about. What you focus on grows. If you're committed to becoming an extraordinary trader and investor, then make mastery your outcome. Yes, my best student, Steve Rhodes, became my best teacher. But even more important is what he's taught me, and the time is now for you to take advantage of his knowledge.
Thanks, Tom. I've learned that it's not what we do once in a while that shapes our lives, but what we do consistently. I want to teach you the consistency that exists in the stock, futures, forex, and commodity markets day in, day out. For one solid day, Friday, May 18th, I'm going to conduct an online master trader course that'll teach you how to buy and sell the D point. This one pattern alone, with the single best entry and exit techniques, when combined with my money management strategies, will create extraordinary rewards for you and your family. The course will be archived so you can review it as many times as you'd like, and it'll teach you to become a master. All the details are on the homepage at tfnn.com. Sign up today because mastery is one click away. It's your decisions, not your conditions, that determine your destiny.
Wow! Go get them, folks.
You've heard Tom O'Brien on the air and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
All right, I'm Kate Stalter. This is the Small Cap Roundup. Give us a call here, 877-927-6648. Taking a look today at some of the recent IPOs, and obviously many of these are small caps. A lot of them do tend to go into the mid-cap range pretty quickly, or that's where they already are when they make their debut, but a lot of them are small caps. Names you never hear about. The Facebooks of the world grab all the attention, and of course that's going to be a huge cap IPO right from the very start of that. I believe May 18th, as I said before, is the date that is expected right now. So just wanted to say, too, I mentioned it a little bit in passing, but I've got to really let you know, we have the Low Price Leaders newsletter up right now. You know, essentially, right now is a very productive time to be building your watch list of small caps and low price names. I have a few stocks we're long in the portfolio right now, watching those very carefully. It is a tenuous time right now, but really the very, very constructive way to make use of this time frame is by building a terrific watch list of some of these small caps, lower price names that when a new market uptrend does take hold effectively, these can be some of the first ones out of the gate to lead the way, can be Very, very lucrative additions to your portfolio. And these are all discretionary. These are all just the kind of things you want to go in there. Sometimes you have maybe a basket of some of these. Get out of them quickly if they are not working. That's one of the methodologies I do employ. Get out of them quickly if they hit trigger points, sell points, or if they're just not acting right even before they hit the sell point. I will do that if you can just tell it's not acting right. And of course, this kind of market condition, not a whole lot out there that really is acting right. You are, that's sort of the beauty of it, though, is you do find yourself in the position of being able to track the technically better performers with the fundamentals that are going to draw the institutional investors. Normally, I am looking for some kind of earnings performance driven by revenue, not driven by cost cuts. And that, frankly, is easier to find in the small cap arena. You do see that the earnings tend to be driven by revenue growth because there just isn't so much fat at these companies that they can cut. You don't see as frequently that cost cuts tend to be the driver of bottom line gains. So what we're going to be doing right now, it looks like, for the foreseeable future is just amassing a fantastic watch list. Just been a tremendous strategy in the past that has really tended to yield quite a few top gaining stocks when a new market uptrend does take hold with conviction. And of course, again, here's where you get to the prediction zone. You have people speculating about Europe, I don't know, about the U.S. election, about QE3, about all the different things. But really, you will see markets begin to rally just when people are the most despondent. There will be some event that will turn things around. It always happens. Always happens, time and time again. Okay, so let's see. I'm looking. We had the European close. Yeah, looks like getting a little bounce on the NYSE indices. Just checking those after the European close. Maybe a little relief rally after that. Okay, I've put up a chart there in front of you. Oh, and by the way, you can check out the Low Price Leaders newsletter, tfnn.com. Get all the information about that right there. And we do send out updates throughout the week if there are buy and sell alerts, so you won't be left out in the lurch. You'll know exactly what's happening in these holdings that I do have. And again, it's not really a model portfolio. These are discretionary holdings. And more sometimes it could be, as I mentioned, kind of a basket of stocks that you just kind of run your own little discretionary type of small cap, low priced account. A lot of these tend to be very volatile, much more volatile than you do see in a dividend paying Dow component, for example, which might be the kind of thing that you can hold and do want to hold during a market downturn because you'll get paid to wait. But these are really all about the capital appreciation, not about any kind of income. So different way of trading them, obviously. Okay, I put up a chart of a company up there in front of you called Home Street, HMST. Now, this is kind of an interesting one. Regional banks have in the past few months been some of the better performers, even as some of the big mega banks, the big financials, the too big to fails, don't succeed that well as they get hammered. The Home Street, HMST is the ticker. This is a regional bank with branches in Oregon, Washington, and Hawaii. The company is based in Seattle. Now, this is an interesting kind of turnaround story, and turnaround stories are frequently some of the market leaders. They do end up kind of emerging out of the depths and doing nicely. Now, this is a recent IPO. The reason this company went public is because it almost became insolvent during the economic and financial market meltdowns back in 2008 and 2009. A new CEO came on board in 2010, and the company decided to raise capital by going to the public markets. So the stock went public, and this is interesting too, it went public at 44 back in February. Now, if you notice, it's trading today at about 34. No, that's actually technically not lower than the IPO price. This is interesting. The stock had a 2-for-1 split only a few weeks after it went public. So it rallied to a split-adjusted high of 31.03 in the early part of last month. Then it began consolidating again. So let's see. Last month, it jumped about 20% back here this week. I really couldn't find any specific news on this one, but it's not unheard of to see either heavy accumulation, heavy buying, or heavy selling without any big news item. It's just that there is some institutional owner that does decide to get in there, perhaps some hedge fund that does decide to take a large position. Let's see. I like this. I like this little trading zone we've got right here where it's just kind of leveling out a bit, just a little bit below the prior high. It's trading just around, you can't see it on that chart. I'm going to put this on a daily so you can actually get another little view of what's going on. So you see that? That's nice. Looks nice on a daily chart too. Some just nice holding right in here at this area. And it's right around its 10-day moving average at this juncture. So technicals looking pretty good. Now, here's something interesting. The company is going to be presenting at an investment banking conference on Thursday. Now, a lot of times, you might say, well, whatever. But those events are interesting. I've been to a couple of those, and it's a lot of fun. Maybe the CEO, maybe the CFO, sometimes some of the marketing people who can talk about some of the initiatives, what's going on. Various representatives from the company come in and present to the institutional investors, and what you see afterwards is fascinating. You see a lot of times the analysts who get on the phone, and you see the stock price rallying sometimes in the day or two following these investment banking presentations. So these are sometimes some of the things that you do see what happens on these. So it's not a bad idea to take notice. If a company is going to one of these events, you might see a bit of institutional buying following that. Not at all unusual. Okay, I want to put up a chart of stock. Let's see, Regions Financial. This is another regional bank, and I know we were just talking about Home Street. Let me pull this up here so I can get a little bit. Yeah, okay, so this is a stock that I'm actually long in right now. We do have a caller. We have Lou from New Hampshire. Hi, Lou. Welcome to the show.
Thank you.
Hi, what was your question? Did you want to talk about RF?
Yeah, an entry for RF.
You know what? I'm kind of looking at this the opposite way right now. This is a stock I'm long in, and I'm just watching it to see if this is a hold or if this is something to exit in at this point. With the market the way it's going right now, I'm not looking for a new entry point in this one at the moment. It's above its 50-day line, and it's actually, let's see here. It's above holding above that 50-day moving average. This is one I'm just watching on a day-to-day basis here. I think at this juncture, if you are not in the stock, you wanna just wait and see what happens here with the general market conditions. Because as I mentioned, the market worries about Europe, worries about what's happening in France or Greece. It takes everything down with it. I've said it before, as much as 80% of stocks do follow the market direction. This is not a disaster RF by any means. It's holding up better than most stocks in the market, but at this point, it really, you might be entering into falling knife zone, Lou, if you did try to make a buy at this juncture.
Right.
Yeah, just wanted to hold on to. Yeah, any other stocks you're in right now or that you're looking at?
GPL.
GPL. Yeah, let me just I'm putting the chart up there on Tiger TV so everybody can take a look at. Oh yeah, Great Panther, of course. Yeah, that's I did recognize that one. This is not one that I'm in right now, and I would look at this chart and say, it's just be careful when you're seeing something that is declining like this. Were you in this as a short or a long?
Long.
Yeah, it's what was your entry point in this one?
I think it was 197.
Oh, okay. So you're not too far off of that right now. You're pretty close in there. It's did you just buy this recently? Like in the past few weeks?
About a week ago.
Okay. Yeah. I could see where it would have been in there a week or so ago. What was your stop loss on this?
178.
Yeah, I would say be careful and stick to that. I mean, day to day here in the market, you never know anymore what news is going to give a bounce or what lack of news is going to give a bounce. But Lou, I would say I just have to say, what I would do if this were my trade. And I would say just with the looks of this stock, with the selling, with what's going on in the market, be sure you stick to your stop loss on that one. You can always buy it again. I mean, I do that all the time. I'll go in and out of a stock, right? I don't write it off as dead just because you get stopped out at one point. So thanks very much for calling, Lou. I appreciate it. Great stocks to look at. Great questions.
Do you think I should exit at this point?
You can. It never hurts to exit ahead of your stop loss if you don't like how it's acting. Hang on, let me get this back up here. You're seeing selling. You're seeing how many sessions in a row? 1, 2, 3, 4, 5, 6, 7 or something. 7 sessions in a row. Yeah, you know what? It can't hurt. Keep your loss small. You can always get back in. It's you preserve your capital, and then when you do see a bounce, if this is a stock you like, a story you believe in, you can jump back in there. I mean, the fundamental picture on this one really has not been, let's see here. Well, you've had a couple earnings declines, but it's remained profitable. You've seen the revenue picture good. It really just depends. A lot of these are the story stocks with these miners, and what you see going on, especially with the Mexican mines, where this one has a large presence. So that could always cause another bounce in the stock as well, and also so could general market conditions. I mean, regardless of the story, you just see a lot of these names moving up or down for no particular reason, nothing to do with the fundamentals, nothing to do with any particular piece of news, right? I mean, you see that all the time.
Sure.
Yeah, and especially with what's happening, with commodities. I mean, you're just seeing everything today kind of moving lower in tandem. So, I would agree with you, Lou. Take your small losses in this one, get back in at the next opportunity.
Thank you.
All right, Lou, thanks for the call. Great to hear from you. Yeah, that's pretty much. I think his questions there just kind of summed up what's going on with so many of these names. They will get swept along with the broader market. And I had a guest on the show a while ago who was talking about the fact that everybody likes to attribute a reason for a big move. There's not always one. It's just selling, it's just buying. You can't necessarily tie it back to some fundamental story, some macro economic reason. And frequently that will be the case, and even when there is a reason, you might see a bounce back quickly. Stick around, we've got one more segment here on the Small Cap Roundup.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave and very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Welcome back. Last segment today of the Small Cap Roundup. I am your host, Kate Stalter. Make sure you check out tfnn.com for the Low Price Leaders newsletter. We have that out there. Very, very productive time we are in right now to be following some of the better performing small cap, low price stocks. When I say low priced, I don't mean penny stocks. I mean stocks priced between $5 and $12. That's a very constructive area because you often do see stocks pick up some momentum and begin an upward trajectory when they're priced within that $5 to $12 range. So we are looking at those stocks in the newsletter, and as I said, I enjoy the corrections because it is a time to be building up your watch list, and one of the things, obviously, as I was mentioning before the break, you have to be aware of, you do have some new market uptrends that do get confirmed by some technical signals. However, they don't always fly. Sometimes if the new market uptrend gets tanked by some heavy volume sell-offs, particularly within the first week or so, as what happened this time around with an uptrend that began in the later part of April, then the rally is most of the time doomed when you see that, and that's what happened. Let's see here. I put up a chart in front of you of a recent IPO, kind of looking at some new IPOs today, which is one of my favorite market topics because that's an area where you often find a tremendous amount of opportunity. Now, this is an interesting name. Millennial Media, market cap of about $1.3 billion. Big liquidity on this one, about 1.2 million shares moving a day on average. So this was very, very heavily trumpeted in the mainstream financial media as it went public. Let's see, back in, when did this go public? Not too long ago, in March, just in March, it went public. I remember talking about it on the show that day. Now, this company provides mobile advertising platforms, so of course those are very hot buzzwords right now, very of the moment, especially in light of the Facebook IPO. We had LinkedIn doing very well the other day, so these social media in its earnings report. So these social media IPOs, particularly Facebook, of course, really driving interest. Now, Millennial Media, it was one of those, to use the word media darlings. It's still unprofitable, has not yet recorded a profit. That's expected to turn around this year. Wall Street expects earnings of 20 cents a share. That's expected to double again, in 2013. However, today, we had, following the IPO, today was the day that a number of the investment banks began their coverage. We had Goldman initiating it with a neutral, Morgan Stanley with an equal weight, Stifel Nicolaus with a hold, Barclays with an equal weight. So can you say meh? Right, that expression, meh. Just nothing going on there. All of these just kind of saying, well, we're not too excited about it, but we're not going to call it a sell. Don't forget, these ratings are for the institutional investors. They're really not so much for the retail investors. They're not, as much as people will go on TV and talk about these to an audience of retail investors, they're not necessarily so much for us. And also, an important point before we wrap up today, I hear the music, but before we wrap up today, a lot of these ratings changes from the investment banks are very, very short-lived. So you see a pullback, but it bounces back within the next few sessions. Now, we have a market downtrend right now. That may not happen so quickly. In any case, check out TFNN.com, Low Price Leaders newsletter. I'm Kate Stalter. I will be back with you on Thursday.